But just say thank you very much for joining me today. Obviously, I'm going to talk to you for the next half an hour or so, maybe a bit longer, about making tax digital specifically for landlords. And then hopefully we'll have some time for questions and some answers after that. I have got Kat helping me out on the call today. So please do put questions and comments and what have you in the chat. Hopefully you should all have access to be able to add messages there. And Kat will be collating those together so that I can go through any questions that arise at the end. So I won't be pausing for questions during, but please do type them into the chat whenever they occur to you. And then if they haven't been covered later in the presentation, then I will get to them at the end. So this is going to be all about making tax digital, and specifically for landlords. So I suspect most of you are probably landlords, so hopefully it will be relevant to you. And before I get into sort of the details of making tax digital, just a little bit about me. So I have been a landlord for over 20 years. This is my first and the last property that I purchased in my personal name. And there are others in between. And as well as being a landlord for over 20 years, I've also been making software for over 30 years, in fact. And around the last 10 or so of those has been focused on making property software specifically, or landlord software a bit more specifically. The last 5 years or so, I've been working with HMRC on making tax digital and the software developments required for that. And PaTMa, my property software, was approved, sort of recognized, went through the HMRC testing process about 3 years ago for PaTMa to be integrated into HMRC's making tax digital system. So start off with who is actually going to be affected by making tax digital. There are sort of two broad categories. One is landlords, and the other is people who have a sole tradership, so a certain type of self-employment. Today, I'm really just focusing on landlords, and within landlords, it's only landlords who own properties in their personal name. So if you exclusively own property in a limited company or some other vehicle, then making tax digital may not apply to you, at least from the property point of view. But if you're a landlord and you own property in your personal name, then you need to keep listening and see if you are caught by the rest of the criteria. And specifically, that criteria is all around the amount of rent. The sort of overall criteria is income, and that covers property income and sole trader income. For a sole trader, it's gross income. For a landlord, gross income means the amount of rent. So it's not profit, it's not allowing for any kind of expenses or anything else to be taken off. It's just the actual total amount of rent that you receive. So on a sort of basic level, if you receive £50,000 of rent or more, you will need to start doing making tax digital from this April. If you only receive £30,000 or more, then you get an extra year until April 2027. And if your rent is £20,000 or more, then you get until April 2028. I've also included sort of what those annual figures equate to on a monthly basis, because that's obviously the way we often refer to rents as landlords. And those 20,000, 30,000 and 50,000 amounts are combined between rent and your sole trader turnover if you happen to be both a landlord and having your own self-employed business. It is a little bit more complicated in terms of when you actually have to start. If you are new to being a landlord, or if your property income has been building. So you don't actually have to be involved or take part in Making Tax Digital until you have told HMRC about that level of income on a tax return. So, for example, the £50,000 for this year, you're only really required if on your 2024 to 2025 tax return, which you might still be filling in at the moment to be submitted at the end of January, if your property income on that tax return was under 50,000, even if you know you're going to be going over 50,000, you don't actually have to be joining Making Tax Digital this April. This is a little bit sort of confusing, I feel, in terms of working out the different years, because you've got a tax year of 2024 to 2025, and then you've got the newer tax year of April 26 starting. And yeah, I think it's a lot easier just to say, if the annual rents are 50,000 or 30,000, 20,000, and you know that's what it's going to be, then you can join Making Tax Digital. You can join Making Tax Digital voluntarily as well, if you want to. I'm not sure you would necessarily want to, but you could. And you can, if you want, potentially delay it if you're close to these cutoffs, but you weren't quite in there for the previous tax return. If you own property jointly with someone else, then it is only your portion of the rent that contributes to these qualifying figures. So if you have one property that had rent of £30,000 in a year, but it's owned between two people on equal portions, then your income would only be £15,000 for that year. And that's the amount that would contribute to it. When you're actually making your Making Tax Digital submissions, the rent and expenses are also split in a similar way. So they're only split based on your ownership, because you as a person are only filling in your personal tax details in the same way that you do on your current end of year tax return. If you've got jointly owned property, you would split it based on the percentage owned and only fill in your part on your tax return. You similarly only fill in your part for your Making Tax Digital submissions. Generally speaking, this sort of splitting will happen automatically within the software. Certainly within PaTMa, you do this. You define the property and how it's owned, who it's owned by, what percentage they own. And then PaTMa will handle dividing everything up as appropriate. And then each person who owns part of that property, if they're called by Making Tax Digital, they must do their own individual submission to HMRC. But it would, generally speaking, all be fed from the same single source of information. You wouldn't normally have to enter it multiple times. Although in some software situations you might, but you certainly wouldn't in PaTMa. So what is it you actually have to do for Making Tax Digital? Well, once you know that you are caught by it, you know that you are going to be involved and joined up for a particular year, let's look at what you need to do. The dates on this slide are very much for if you're caught in the £50,000 or more starting this year. But of course, if you don't start until next year or the year after, you can just add a year or 2 years to all of these dates. From April, you need to start keeping digital records. I'll explain in a few moments what a digital record is, but that's what you need to do. Then 3 months later, after the end of the first tax quarter, in July, you need to make your first quarterly submission to HMRC. And again, I'll explain exactly what that is and how that works a little bit later on. You actually have until a few days into August for the actual deadline, but so generally speaking, you want to be doing this in July. Other 3 months, October, you have second quarterly submission. another 3 months, January, your third quarterly submission, another 3 months, April, your fourth and final quarterly submission for that tax year. Then from April 2027, once the tax year is finished, all the way through to January 2028, you get to complete your normal annual tax return. You do need to use Making Tax Digital software for that end of year tax return. And again, I will explain more about that in a minute. But you still have that normal window. The actual deadline for filling in your whole finished completed tax return is the same as it currently is. That's not changing. And the tax payments that you need to make are also the same. That isn't changing. So what are digital records? Well, the requirement from HMRC is you must store information about each individual transaction, and it must be stored digitally. So a pile of receipts that describe each individual transaction in a box in paper or on paper do not count, because they do have the transaction, but they are not digital. Similarly, taking that pile of receipts and typing all the numbers into a calculator and then typing that total number into a spreadsheet or some other computer system is also not meeting the requirements, because it is now digitally stored, but you do not have the transaction level stored in digital form. So from a landlord point of view, you have two broad types of transaction. One would be rent. You need to store the date, the amount, and some kind of connection to what it relates to, so property, tenancy, etc. And on the expense side, you must store, again, the date and the amount, a bit of a description, so you know what it is, and the tax category that it relates to, so you know where to file this information for HMRC. You can, of course, store more information if you want. You may well want to store the receipt or the invoice or whatever it is on the expense side of things. And you may have rental invoices that you create and use on the rent side of things as well. But at the core, these are the things you must store on a per transaction basis in digital form in order to meet the Making Tax Digital requirements. So once you've collected all of your transactions together, and you've been doing this for a quarter, so you've got to the end of the quarter, what is a quarterly submission? And what does it actually sort of look like or involve, really? So it's really just a short version of the property page within a self-assessment tax return. So the SA 105 page, and it includes all the figures from the start of the tax year to the end of the quarter that you're submitting. So in quarter one, it'll just be 3 months worth. For quarter two, it'll actually be the 6 months to that point. So you get to resubmit your first 3 months as well. And this is good because it gives you a chance to make any corrections or add in anything that might have been missing as well when you make that second quarter submission. And then again, 12 months when you do your fourth quarter. You are required to check that the data you're sending HMRC is accurate, or at least close to. So HMRC have said that these are not going to be expected to be perfect. They're not going to hold anyone to them. But if you don't send them, or if they conclude that you're sending nonsense, then you can fall foul of penalties. But it doesn't have to be perfect. And HMRC sort of accept that they're not expecting them to be perfect on a quarterly basis. So once you've looked at them and you check they're about right, you normally just click a button and the figures will be sent for you to HMRC. Certainly that's the case in PaTMa. You can see an example screenshot here, and the big blue button at the bottom is just the one you click to confirm all the details are right and get them sent off to HMRC. Now, I want to talk a little bit about the software you need to choose. Unfortunately, the HMRC website is not the easiest to navigate when you're trying to find out what your software options are. So I'm going to try and sort of break it down a little bit, and I've got a bit of a list later on as well with some pricing comparisons and things. So there are a few more details on this, but broadly speaking, you can choose two types of software in order to collect your digital records and then make your submissions to HMRC. The first type is landlord-focused software, and generally speaking, these are built to be landlord-friendly. Certainly, PaTMa uses language that is understandable to landlords rather than necessarily being understandable to accountants. And the landlord-focused software doesn't just allow for finances, but it also includes all of the other things that us landlords need to keep track of and handle, from compliance, gas safety, EICR, etc., and the reminders related to that, through to keeping track of the tenancies and the tenants and their contact details and when they started and how much rent is due and all that sort of thing, across maintenance. And then on top of that, there's normally help with processes and checklists and the paperwork involved, whether you need to send it to tenants at the appropriate time and generate inventories or contracts or all that side of things. And of course, one example of this type of software is PaTMa Property Manager. On the other side, the other type of software that will help you do your making tax digital submissions is accounts-focused software. And these will, generally speaking, only store financial records. So you don't get any of the other details around your property and your property portfolio and your property management processes. And because of that, they have very limited reporting. You can't investigate and sort of find out where your portfolio is performing or not performing so much. Some of them do have a breakdown by property, but not all of them, and not necessarily in much detail. And of course, they don't provide any help with all of the other stuff that landlords have to do on a day-to-day basis. Now, this accounts focus category does include bridging software, which is software that will sort of allow you to keep your records still in a spreadsheet and then send the data from that to HMRC. And I will talk more about that in a moment. But again, of course, it's only focused on the financial records, not any of the other support and things that other software can provide. And a couple of examples in this category are Xero and Free Agent, which are both very well-known bits of software that are accounts focused. So more about bridging software. Of course, everyone loves a good spreadsheet. I am absolutely in that camp. I do love spreadsheets, but they do have their limitations. And there are many different ways to use a spreadsheet. If you are to meet the requirements for making tax digital, you must store per transaction digital records. And while these don't get sent to HMRC from any of the systems, you still need to store them. And that means that you will need to have a more complicated spreadsheet. You will need to have a spreadsheet that keeps track of each rental transaction, that keeps track of each expense transaction with those details I mentioned earlier on. And then you're going to have to feed the totals from that through into the rest of the sort of collated data that you then would need to be able to send to HMRC. At the moment, there seem to be very limited software options on the bridging software side of things. In actual fact, when I was putting together my pricing comparison that you'll see later on, I could only find one example that looked like it was working and sort of ready for use and published pricing. I think there probably are some others out there, but it's a struggle to find. Of course, a lot of the accounting focused software is very much targeted at accountants. So even just navigating their websites to try and work out whether the software does the right thing or not, or what the pricing would be for an individual, is actually quite difficult, worryingly. So I think trying to use bridging software, which may well be absolutely the right way to go for people, especially people who have much smaller portfolios, who don't need to end up with a very complicated spreadsheet, it could work well. However, unfortunately, it looks like it's going to be a bit of a difficult environment to work with. And of course, it's got lots of limitations. One of those limitations is that generally speaking, the bridging software will only allow for the quarterly submissions. They generally don't have any support for the annual return, which of course you can't feed from a spreadsheet particularly, because you've got lots of other questions and independent bits of data and numbers that you must supply. And you can't use the existing HMRC annual return anymore once you're in Making Tax Digital. You have to use Making Tax Digital software to do the end of year annual return. And if you're paying for bridging software and it doesn't provide the end of year, you've still got to pay for some other bit of software to do that end of year stuff anyway. So bridging software may not be the answer that a lot of people are hoping it will be. If you do want to look at bridging software though, how does it work as a principle? Well, some of them will provide you a template spreadsheet that you download and you can start filling in. Otherwise, you could potentially build your own spreadsheet as long as it gives per transaction details and sums everything up to give you totals. Again, you're not allowed to type any numbers after the transaction details. Everything must be calculated. So you have to use formulas within spreadsheets. But once you've got your spreadsheet and your template that you're working with, you obviously then have to record all of your transaction details, type them all into your spreadsheet. Once that's finished, you upload the spreadsheet to the bridging software. It will sort of display your spreadsheet effectively in their interface, and you pick the cells that refer to the relevant totals that need to be sent to HMRC, and then you click the appropriate button to send those off to HMRC. And then in another 3 months' time, you've obviously maintained your spreadsheet over that time, and then you have to upload a new copy, pick the cells again, send it off to HMRC. So this is the bit that I'm hoping will work, but coming up now is a quick demo of how MTD really works in PaTMa. And this is using the HMRC test system, which doesn't always work exactly how we would wish. So I'm hoping this will go okay, but please forgive me if it doesn't. So just depart from that and pop across to PaTMa. So this is a demo account that I've created for use today. We've got a couple of properties in here, and before we actually do the connecting to HMRC and submitting details to the Making Tax Digital systems, I just thought I'd show you how you would sort of finish off entering some of the details. So we've got some properties here, and we've connected a bank feed. So we've come into our bank feeds, and this is connected through open banking. So the system automatically downloads new bank transactions every day. And you can see for this, we've got a few transactions that have come in January that we haven't processed yet. PaTMa has automatically detected that this one is a mortgage payment for £1,400. And we can just click to say, yep, that's that expense that we're expecting to have. And this is a different mortgage account on a different property. This one's only £900. We've set this up in the system to be expected. So PaTMa has suggested the connection. We can say, yep, record that as an expense. And then this last one is a rental payment. And again, the system is set up to expect the rent from tenancies. And we know that this tenancy is this amount on this date. So we've suggested the match, and we can just click to connect that. And that's it. We've processed all our new transactions for the month, and our bank feed is now empty. And we can now go across and look at our tax. The initial page there was the original one. If you're not using Making Tax Digital, you can create your property page information for a full tax return. But in the case of Making Tax Digital, we've now got this setup process. This is not live in PaTMa at the moment. If you were to create a PaTMa account at the moment, you would just see a sort of coming soon panel on this page. But obviously from April, it will be live to everyone. And the first step is to go off to the HMRC website and register with them for Making Tax Digital. I won't go through that process because I don't have a test account to do that with. And it's a little bit long-winded. But anyway, there we are. That's the first step. Once you've told HMRC that you're going to be using Making Tax Digital, you can then connect PaTMa to your HMRC account. Now, as I said, this is a test system using HMRC's test sandbox. So these details are all made up in that system. So there's nothing secret going on here, but you put in your national insurance number and click start, and we hope that it works. There we go. We can just get rid of the cookie messages from the government site. So we've been sent across to the HMRC website now, and you can see that PaTMa has requested permission to be able to access self-assessment information for this user. We can continue this. Explains you'll need to log in to the HMRC system, and yes, we can say we log in. And again, these are all made up details, so don't worry about anything being secret here. I'm just copying and pasting these from the test system. We enter user ID and password, we sign in. Do not want to save those. And then it just asks for one final check that you actually want to give PaTMa access to your self-assessment. And we say yes. And here we are. We're now back at PaTMa, having connected PaTMa to HMRC and the Making Tax Digital system. I mentioned earlier that within PaTMa you can have multiple landlords and you can have ownership, whether that's split between multiple people on a single property, or one landlord owning multiple properties or different bits of properties or whatever else. There's lots of different scenarios you can set up in PaTMa. So before you can actually submit numbers to HMRC, PaTMa asks you just to confirm which properties are actually yours. So in this particular account, we've got 2 properties, both owned by the one landlord, and we can just say that, yes, this is us. This is our portfolio of properties. And there we go. So that's all in there and ready. If you had access to other landlords within the same account, so perhaps a husband and wife or something, then the first user would log in and choose their landlord, so 50% of the properties. And then you would add a second user account to the same, or sorry, a second user login, I should say, to the same PaTMa account. And then the other partner would log in and they would choose the other landlord to be their portfolio to be submitting to Making Tax Digital. So with that chosen, we can come back to the Making Tax Digital tab. And we can see that we've got a few things that are a little bit strange here, partly because we're on a test system. So that's defaulted us to a calendar quarter. We're just going to convert that back to a standard quarter, which is the more traditional, starting from, starting from the 6th of April. And you can see that we've got start of the quarter, end of the quarter, and when it's due by. These dates will actually be slightly different next tax year. So from April 2026, you get a couple of extra days, but this is what we've got for now. And we can just see that the first quarter is due and ready for us to review. So we can click on review. And here are all of our figures. So we've got a breakdown of all the rents received and a total, breakdown of the expenses in the different categories. So we can review everything, make sure it's all correct, make sure everything is as we're expecting. And assuming we're happy with all of this and all of the totals, we can just click to submit it to HMRC. And there we go. That is submitted to HMRC. You can see that's now been met. We can, if we need to, because something has changed, we can resubmit it. And we can also click to view it to see those details. Similarly, you can view a tax calculation, which is provided by HMRC. Obviously, after just one quarter, it's somewhat of an estimate, especially seeing as it's only property figures that you've submitted, but you can view it if you wish. I won't show you these now on the test system, because on the test system, the data that's returned is made up and it looks a bit weird. But in the live system, that is there, and that is all working. PaTMa does have people using Making Tax Digital in the current tax year. So what is that? 25, 26. And quarterly submissions have been submitted from PaTMa already to the live system. So this is definitely all working. Righty-ho, I will jump back to the slides now. Hopefully that made sense and showed you that it was really quite straightforward and easy to do those quarterly submissions. And each quarter, PaTMa will send you an email to remind you when it's due. So you don't need to sort of remember to come and log in at the time. Just keep an eye on your emails. When you receive that, log into PaTMa, make sure your transactions are up to date, and go from there. Oops. Let me just click in the right place. Rightio. So I mentioned earlier that after doing your quarterly submissions, you need to do an annual return. This is, of course, nothing new. You've probably been doing self-assessment annual returns for many years as a landlord. And this is still the same idea, the same principle. However, you can no longer use the web-based system that's provided by HMRC. Once you're subscribed to Making Tax Digital, not only do you have to do the quarterly submissions using Making Tax Digital software, you also have to do the end of year annual return, annual submission using Making Tax Digital software. Specifically, Making Tax Digital software that supports the annual end of year return. This could be the same software that you use for doing your quarterly submissions. PaTMa is going to have an option for this. We already do the quarterly submissions, and we will have end of year submissions working as well before they're needed. However, it could also be different software. You could have one bit of software that you use quarterly for the quarterly submissions, and then completely different bit of Making Tax Digital software for the end of year annual return. And that can all work perfectly well. I thought I'd go into this a little bit more to give you a bit of an idea of how that sort of works and how that fits together. So during the year, you'll be making your 4 quarterly submissions. Hopefully you won't be making your quarter 2 submission 3 times. Obviously, I didn't proofread my slides very well here. My apologies. This should be quarter 1, quarter 2, quarter 3, and quarter 4 property submission. And that data all goes to HMRC. And that's sort of filling in the details for your property page figures, but only your property page figures, because you're just sending your property information. So then at the end of the year, the software that you're using for your annual return, whether that's the same software or different software, will actually talk to HMRC and request your final, so your 4th quarter property figures. And HMRC will provide those as stored from your quarter 4 return. And then your end of year software will ask you for all of your other income, savings, dividends, PAYE, pensions, whatever it might be, alongside the ability to correct anything or finish off anything, add any adjustments and things within your property figures as well. So it's basically the same as your normal end of year tax return, except a bunch of the figures, particularly from property, will be pre-filled for you because they will have been fetched from HMRC, regardless of which software you use to fill in those quarterly returns. And then once you've got everything finished and you're happy that your end of year tax return is complete, you then click a button in the software and it gets sent off to HMRC again. HMRC will receive that, process it, and perform the tax calculation for you. So you can then view that and see what your tax liability actually is. Now, I suspect throughout this, some of you have probably been shouting at the screen to comment on the fact that you don't do any of this because you've got an accountant and they do all of this for you. But even if you do use an accountant, the quarterly Making Tax Digital submissions still need to be sent to HMRC. And it could be that your accountant will take that on. I'm sure they'll want to charge you a bit more for doing that, but they could do it. And here are sort of 3 scenarios of how responsibilities could be split up between you and your accountant. So it could be that you currently collect all your receipts in a big box and you ship them off to your accountant every year. You could stick with that. You could do that, but just every quarter. And of course, it may not actually be a physical box of paper. This could be electronic files of receipts. It could be a spreadsheet that you've prepared that you send off to your accountant, or perhaps multiple spreadsheets, multiple files detailing things, the rent versus the expenses versus whatever, or combination of these. The point being that you don't really prepare them, you don't enter or store your digital records, but your accountant would take this raw information and they would turn it into your digital records. And then from that, they would create the quarterly submissions and make those to HMRC. And then I would expect, given that they've done everything else so far, your accountant would then also prepare, complete, and send off your annual tax return as well. Scenario 2, it could be that you enter the digital records and then share them. So this could be that you enter them into PaTMa and then you share access to your PaTMa account with your accountant. Or it could be that you enter the digital records into PaTMa or another system, and then you export them again from that system and send them off to your accountant, which is also possible in PaTMa as well. And then your accountant uses those digitally entered records to make the quarterly submission using their software that they have for that. But they're using the digital records that you've already given them, or if it is that you share access to PaTMa or an accounting system, or whatever, where you've entered those digital records, your accountant might just be able to do that submission within that software. They certainly could in PaTMa. And then again, they would do the annual return. Third possibility is that you enter your digital records and you do your quarterly submissions. This is particularly possible given that HMRC have said that they don't expect the quarterly submissions to be perfect. They can be close, and that's okay. And that means that even if you want normally your accountant to check everything before it actually goes into your tax return, that will still be the case. You can enter your digital records, you can send those quarterly submissions, and your accountant still gets a chance to check over everything at the end of the year. And this would probably mean that they would have different software that they would pull back the details from your quarterly submission or your last quarterly submission and prepare your annual return within their own software before they then submit that. Okay, I thought we'd have a quick look at some costs for different software. Now, this is actually quite difficult to pin down, and lots of the software has introductory offers that make it cheaper for the first month or the first 3 months or the first 6 months or whatever. And some of them obviously have different features included and not included. And of course, the landlord software does an awful lot more for a landlord than just the accounting software does. So it's not necessarily a very fair comparison here. And different software prices based on different things as well. So obviously, property software, landlord software is quite often priced depending on the number of rental units you have, but they aren't all. So anyway, to give you a bit of a rundown, I'm not going to walk through all of these, but I will just particularly pick out that a couple of the landlord software items on this list are not currently approved by HMRC, but they are on the list to be approved, and I expect they will be before Making Tax Digital starts. And the other one to pick out is that 123 Sheets was the only bridging software that I could actually find that looked like it was currently working and had pricing available. And so far as I can tell, there was no annual return facility within that. So that would only be for the quarterly returns. And then you would need something else. So probably one of the other software systems on here, the accounting software system, sorry, in order to do your end of year return. So that's everything that I wanted to specifically show you today. And we've still got a quarter of an hour or so left for any questions. I've put on screen a quick reminder of the dates and years and criteria for being included in Making Tax Digital. But please do put any questions in the chat, and I will see if I can see if Kat has already collected any for me. Okay, so first question in, is income from paid employment included in £50,000? And the answer is no. The only things that are included in the 50,000 or 30,000 or 20,000 sort of requirement level or decision, whatever, is property income, so property rent, and sole trader income, so sole trader turnover. So again, you don't get to take off expenses or anything. It's not profit based. Those two are combined, and the total of them in a year is what you must compare to the 50,000, 30,000, or 20,000 in order to work out whether you must do making tax digital or not, and when. Okay, question on pricing. Let me just jump back to the pricing slide. So are the competitors' prices per property? So on the landlord comparisons here, these prices are the minimums that you can pay. So for example, for Landlord Vision, the minimum price, once you exclude temporary discounts and things, minimum price I could see was £288 per year for 4 rental units. So if you've got less than 4 rental units, you still have to pay £288. If you've got more than 4 rental units, it would cost you more. Similarly, for PaTMa Property Manager, the minimum is £180, unless you're counted in the free tier with just 1 rental unit. But for the paid one, £180 a year, and that includes 5 rental units. So if you've got 2, 3, or 4, you still have to pay £180. And again, if you've got more than 5 rental units, 6, 7, etc., then the price would go up. That's the same for Landlord Studio, same principle. The accounting software, because it's accounting software, is generally not priced per property or per rental unit, but is generally a flat fee. Some of them charge extra for the number of documents or expenses, or the number of transactions you're recording, or the number of different, or they charge extra for some extra pages within the final tax returns, so different types of income. So there are some extra complications in those pricings, but generally speaking, for the accounting software, it's more of a sort of fixed price regardless of how many properties or rental units or whatever you're considering. Okay, more questions. Give me just a moment. How important is it to get the tax category correct on quarterly submissions? So the quarterly submissions are not the final figures. They don't actually decide your tax, your final tax return, your final tax payments, whatever. But I would say you want to try and get it as accurate as you can. So certainly it's very important that you separate out finance costs, so interest, because that's treated very differently these days on property, as I'm sure everyone knows. And that's certainly very important to have separated out. You also want to be a bit careful that you don't accidentally include capital costs in your sort of revenue expenses, because again, that will distort things a lot. And if you sort of have lots of expenses in a quarterly submission, or very little expenses, then you change that later, I suspect that might raise red flags. But so you want to try and keep it fairly close to what it actually is. But again, you can, just as much as you could check at the end of the year, if you're doing it yourself, you could check in the year. And if you've got an accountant helping you, then of course you can ask your accountant for advice within the year as well as at the end. Will PaTMa be creating annual tax return software for 25-26? So we are not 100% certain yet whether we will be supporting 25-26 for the end of year software. Partly because I don't think we will have all of the income types ready in time. So it might depend on the income type that you need to cover. For 26-27, we will definitely have annual tax return software ready, and we will have most income types supported. Again, there will be some edge cases that we don't support, some of the much rarer ones, but the bulk will be supported there for the end of year tax return. Will PaTMa be expanding into creating transactions for self-employed? No, we're not planning to cover self-employed quarterly returns or self-employed transaction tracking. It's only going to be landlords and property within the year, currently for the quarterly submissions, and for actually doing the digital record keeping. Sole traders won't be included. We will support sole trader income type for the end of year, I think. So there you would pull in your fourth quarter from HMRC, where it's been submitted from another piece of software for the sole trader income, and then it would be available to finalise in the end of year tax return. But yes, we're not planning to be keeping digital record transactions for sole trader businesses. So any last questions? As it currently stands, I think I am out of questions there, unless Kat's got any more that she's desperately typing at the moment. So I'll give Kat and anyone else a few more moments to type any final questions, and then we'll wrap up the webinar today. Just to say that this has been recorded, and the recording will be sort of tidied up as quickly as we can sort that out, and we will send that out by email to everyone here, and probably to other people who signed up but couldn't make it and things as well. So yes, unless there's any final questions, which I don't think there are. I'm actually just looking at the chat now. I can't see any there. So yeah, thank you very much for attending. I hope it was useful. I hope sort of trying to take a practical approach to what you actually need to do and what you need to find was useful. Any feedback or suggestions for the next one, because we probably will run another one, please do let us know. You can email support@patma.co.uk with any comments and suggestions, and we're always happy to receive those, and we'll try and roll them into another one of these if we do that. If you suddenly wake up in the night with a burning making tax digital question that you didn't get to ask on here, again, feel free to email in, and I'll try and answer that by email if I can. Thank you very much for attending, everyone, and good luck with your Making Tax Digital.